Hello, everybody. It's time to get back to truth or skepticism. Dylan Radigan, how art thou?
I'm very good. I missed you. I mean, I'm all thrown out of sorts. We're starting late. We didn't even talk last week. I feel I've changed. I'm back in New York, so my whole, the whole thing. I feel very confused.
Well, I'm gonna put your mind a little bit at ease right here. China, safe to get back in the water. It's all the last
Really?
pandemic.
Sound me all clear on China. That's
all
good.
Clear.
I had the jet lag. I couldn't quite tell what was happening. So that's good. Okay, so we're all clear in China. What else you got?
Officially, as of today, China is all clear. And officially, as of today, they just, your buddy Jay Powell just announced that they are interest rate hikes going to be knocked down. So no more 75 basis points.
We're going to take it easy. We're going to take it easy. Merry Christmas.
Now, of course, because all this is already, the bond market's already rallied from 118 to 127. So that the bond market's already rallied by, almost 6 or 7%. So again, I will just state for the record, as Jay Powell and the rest of the Fed are just nothing more than masters of the obvious.
Well, hang on. So you're going to.
I'm not asking this to be the topic of discussion. I'm just merely
something.
I'm merely throwing kind of a little bit of a cheap shot out there.
Well, you're taking advantage of the calendar as well. Tomorrow is December 1st. So it kind of has a very poetic flavor to sort of talk about 2022 as a year of difficulty and consternation for many a different counterparty. And then to establish maybe a little bit less hostility from one of the major forces, which you would argue is the bond market, and I think you'll be correct in saying, and the world might perceive as the Federal Reserve.
Correct.
So that means dollar gets weaker. That means houses, what is that? Why do we care? Let's assume the bond market is right.
We don't care other than everything goes back to, kind of a little bit like the way it was. That's all.
Well, I mean, that's not nothing.
No, it's not for nothing. It's just what we've been saying all along is the next step. I mean, everybody else is sounding the alarms and, and panicking. And it's like, okay, this was just, it wasn't a question of if this was going to happen. It was just a question of when.
And I'm asking you, if it's happening now, then that should have which seemed like a seismic shift in the trading environment.
It already has. You're probably going to see, vol's down 90 cents today, which is almost 4%, and the S&Ps are up 2%. So the answer is yes, exactly.
And the dollar?
Dollar just got whacked.
So party's over.
I mean, it's everything just turned from red to green. The whole world just went from red to green.
And I feel like there's a little bit of skepticism, even I would dare say condescension.
Yeah, it's not skepticism, it's condescension.
That is the preposterousness that it can turn from red to green on the stroke of any pen, anytime, anywhere. And which I don't even think merits debate, because it is what it is. But I am curious whether the perception of that signature, of that inflection point, whatever the consequence is, because it's Christmas, it's the end of the year, whatever it is, that it has consequence because it's recognized as such, regardless of whatever the absurdity that caused it to be recognized at that time.
The consequences is the consequences. Yes, it has consequences, but it's very subjective, and so that just means that it opens the door for more people, to allow more people into the playground. That's all it is. It just, for some people, like for people like me, it actually takes away some of the opportunity. For other people, it suggests that it's safe to get back in, and start playing again. So I think overall, it's just, that's the change.
That it makes the market more accessible.
It makes the market more accessible for more people. It also reduces the amount of opportunity that, people like me, that was there yesterday that's not there today.
Clearly.
Yeah, we like noise, and most people like quiet.
I know who you are, sir.
Thank you. All right, what do you got for me today? I'm ready.
No, that's what I want. But I think this is I think this is the whole. We've been through 3 years in a hyper elevated state. It's like being in an adrenalized fight or flight condition as a planet for 3 years.
Okay.
We may be at the very least adapting to the new normal going into 2023. And I'm interested to whether you have changed your opinion at all, specifically about the things that matter most to you, having to do with the drag on productivity from hybrid work, we'll call it, and the overall sort of confidence level you have after a lot of events going into the last month of this year.
These are all very different. These are all very different questions. On the one hand, as a trader and an opportunist, I love dysfunction and noise.
I'm not suggesting that. I'm not asking your emotional relationship.
This has nothing to do with emotions. This has to do with opportunity. And as a trader and someone who seeks opportunity, I like dysfunction, I like noise, and I like fear in everybody else. So that's what I prefer. As a business person who also likes noise, fear, and opportunity in the sense that it creates business opportunities for us. I feel like that all of these are a little bit negative. The things getting better is actually negative for me. But the positive side is that I think this will allow us to do things that other firms are not going to be able to do right now, which is just kind of where you were going, which is tighten up, get everybody back on board, and start to tighten things up. We've been really loose for the last 2 or 3 years, and loose meaning who comes to work when, who does what, how much responsibility, how far can you push people? I've been running a business with kid gloves now for what feels like 2.5 years.
3 years.
Yeah. Don't do this. You can't push this person any harder than you push them, Tom. You can't do this because they're just going to leave. And I mean, nobody's left, but people have been, telling me.
But I think that's a microcosm of
sure, of course,
bigger thing, which is that people. I think the maximum people can tolerate a pandemic, war, and apocalypsism is 3 years.
Yeah,
I believe time's up.
I also think that firms have gotten like one of the things that we've done is we've been very careful, but we haven't cut back at all. And I think that one of the things that happens when you cut back is that you do it out of necessity to preserve your stock price or whatever else. But the flip side of cutting back is that you also get double whammied when things turn around, because as soon as things turn around, then you've got to go the other direction, and it's really hard.
Chasing with a weaker horse than you had before the party.
Of course, because you just damaged your reputation. You just laid off 10% of your workforce, and then tomorrow you got to go back and start hiring again. Then the first thing somebody says is, well, what if you change your mind again? Whereas we get to say to people, we've never had a layoff in 20 years. I mean, it's a.
But again, my interest is this is fascinating because I'm your friend and I'm a fan of the business. But I'm more interested, quite honestly, in the context of the global macro. In other words, what you're talking about is a conversation.
And the funny thing is, I'm less interested in the global macro, and I'm way more interested in what does this do for me?
Of course. But you're also someone who has said that global productivity will be down by 10% going forward because of inefficiencies in the labor system due to remote work.
Yeah.
And I would say there's a come to Jesus, as they would say here in New York anyway, on the hybrid model going into 2023, whether it's the bankers or the lawyers or the publicists or the traders or whatever, that, you know, that the kid gloves are all will be that the economy will reveal itself in a more real way next year than it has since before the pandemic, I would say.
Well, yeah, I mean, I think that's fair, and I think there truly has been a you know, a come to Jesus moment already. You know,
Of course.
yeah.
You know what, the come to Jesus has been happening for. My point is that the consequences of come to Jesus will start to show themselves next year. Come to Jesus has been 3 years in the making.
I agree with you. I agree with you.
But I think it'll be interesting to see brands, whether it's Tasty Trade or other brands, begin to really play offense. There's been a defensive posture, I would say, for most businesses, or exploitative sort of counterpunching, adapting and exploiting weakness, which is one of your strengths. But I think 2023 is the first time in years that we see offense, where we have see self-directed planning from a management for their brands.
Yeah, well, I think we've seen enough. One of the things that 2022 accomplished, as far as I think, getting back to just kind of talking about the big picture, which you brought up before. One of the things that 2022 accomplished was that we burnt down enough of the forest that we did enough damage, I guess is the easiest way to say it. The marketplace it's self-corrected. So there were fringe players that there were outliers that didn't correct that much, but the general population corrected and self-corrected in a way we haven't seen on a very broad-based self-correction that we haven't seen probably for, you know, a decade and a half. So I think that the bottom line of 2022 is that we set ourselves up potentially and put ourselves in a really good situation going into 2023.
I mean, the word I would think. I mean, we're not going to, not that this is some sort of retrospective, but I think it's interesting looking into December to perceive that 2022 actually may be the biggest sort of recalibration to the reality side, if you will, since 2008.
Well, you need that every once in a while. You know, you got to get slapped in order to remember, like, you know, how that the system actually works, because we get full of ourselves. Everybody does, and this market was full of themselves on a public level, on a private level, on an institutional level, on a retail level, and everybody got way too carried away with easy money. And everything just came back. Everything just came back into a, you know, everything got normalized this year, and I can't stress how important that is. Now, again, I want to be selfish here, as an opportunist.
And now the Fed chairman declared it over. By the way, I mean this is an official.
Pretty much, yeah. But I mean, the bond market declared it over 3 weeks ago. That's why it surprised me that the market was that there was such a lag between, you know, what we're seeing today and when the market actually, you know, kind of made this move. But I think that there's a part of me which is like, oh, this is cool, you know, good, I'm happy for everything. But there's another part of me, the opportunist part, the selfish part, that says, damn, you know, there's so many things we were looking at, we were this close to doing, and I don't know.
You just navigated a legendary 3 years.
Yeah, I know, but there's also these things I thought they were going to get a little cheaper. Like there was a couple things we were waiting out. You know, like you're sitting there waiting until they die, and then they didn't quite die. You know, so.
But that's why people lose money no matter what. When that actually goes to the whole, you don't know. You have to play like you don't know. You can't play like you know.
No, of course not. Of course not. Yeah.
It's been your whole principle here.
Yeah.
Does that mean the bank? In other words, can I now? The bank's peaked. I mean, I can start running a whole narrative on you here on an apex in rates. And I don't know if you're just going to tell me you don't care. It doesn't matter. I don't want to bore you with a predictable question, but I'm intrigued by the sort of clarity of the inflection point with the precursor of the bond market, the rally in the stock market, the collapse in volatility, and the sort of clear news peg, even if it's a capstone to the bond market of Powell saying, "Yeah, we get it."
Well, I mean, when you think about volatility, just as an example, I mean, it's the VIX futures right now are 22. This whole year, we've averaged over 25 for the year, and we're still down, almost 700 points in the S&Ps, or 600 points in the S&Ps off the highs. So when you think about that, we've normalized, we've normalized fear incredibly quickly, and we're basically, and we've normalized fear, we've normalized price, and to a certain market impact, we've essentially commoditized the efficiency of this market this year in a way we have never seen before. So I think that from a public investor standpoint, everybody is in really good shape right now. From an opportunist standpoint, man, we're gonna kick ourselves for not.
You missed it. There's some things you missed.
Yeah, right. There's some things we missed.
And listen, nobody's perfect.
Yeah, I know.
There's some things you got.
Yeah, I mean, like lots of people go back and they look at 2008, just as an example. And when I go back and look at 2008, I don't for 1 second go back and say, damn, I should have bought, XYZ stock here and held it. I should have done this and that, because I had every opportunity to that. But I do go back and look at 2008 and go, you know what? I'm an idiot for not buying some real estate that they were blowing out at the bottom. Like I think about that. Like, I'm like, what? The stuff I'm involved with every day, like the stock market, I have no regrets, because I was right there. I could have done anything I wanted to. I did anything I wanted to. I just couldn't hold it. But I look at other things and go, I kind of butchered this. I should have jumped in here. I should have jumped in here. I should have jumped in here. Yeah, that's all.
Oddly, I feel like we may be healthier than we've been in a long time.
Yeah. Well, because you got lean.
It's like after a lot of truth has been told.
Yeah. Yeah.
Including, say, all the different angles and dramas and bankruptcies and whatever's.
Yeah, like you weeded out the crap. You got rid of the frauds. Like the classic, what they're going to talk about, in 2008, there were a lot of things that were wrong. It wasn't just credit default swaps. It was,
the system.
Yeah, the system. There was a million, there was a lot of breaks.
Trading agencies, the swap, it never ends.
Everything. But this time around, it's different. There were IPOs that were grossly overpriced that these investment banking houses shoved down people's throats. There were ridiculous SPACs that were worthless companies that were, that raised billions of dollars because somebody figured out how, blank check companies could basically rip off institutional investors and sucker the public in. There were fraudulent, there was just a disaster in the digital asset space with incompetent management teams and clueless young CEOs and people in that were taking customer funds that just, it was a disaster. It wasn't just FTX. It wasn't just Three Arrows or Genesis, but there was.
But do you think that sort of mid-level deception and fraud is higher than it has been in the past, or is it just more?
No, it shifted. We used to have in 2008, I wouldn't call Lehman Brothers and Bear Stearns fraud. I would call it ego-driven incompetence. And
I'll call it too much leverage.
Too much leverage, but too much leverage is ego-driven incompetence. They just didn't understand risk. In 2022, that was very different. That was just, naive incompetence. Just like never should have happened.
You're saying the skill level, the proficiency of the managers was higher in the past.
Yes.
But at least Dick Volt knew what he was doing.
Well,
even if he didn't.
And this was a different kind of incompetence than 2008, and we had to weed it out. It's been weeded out. I would say that if we look back at when we look back at 2022, we'll probably point to the FTX scandal as the market bottom, similar to what they did
the signature to Madoff.
Yeah, Yeah, the signature Madoff move. Yeah, I think they'll look at it that way.
right?
And I think that I also think that that's probably a pretty good chance that that was the, based on Bitcoin today trading over 17,000, up over 800. I would say that's probably a pretty good chance that that was the low in digital assets. Even though a lot of people think they're going a lot lower, I don't necessarily believe that. So I think that, I think you have these defining moments, and they're fascinating to me. I mean, you can go back to 2021 and talk about the meme stock stuff or the pandemic. There's always these things that we can relate to at market turns, and we're at a pretty interesting time right now. The end of 2022, heading into a very slow, triple witching, slow month. Pretty interesting here.
I feel more alive today than I have in a long time.
A lot of people like that. Yeah, sure.
Because I feel like there's so much information, I guess I would say. Because of the conflict and consternation of the last 3 years, I feel like a lot has been clarified in every layer of life.
Yeah, and there's the next shoe to drop, in my opinion, will be a changing of the guard. Will be a global changing of the guard. I think you're going to see. In a lot of different countries, I think you're going to see in Iran, it's about to blow up. I think in China, there's a good chance.
You just told me China's fine.
No. China's fine as far as equities. Finally, they're turning around, but I can easily see a change in, a pretty significant change in power. I think in Russia, you're about to see a change in power. I think in the U.S., you're going to see a very different 2024 election and very different candidates than you've seen before. And so I think you're going to see a real change in global dynamics. I think you're going to see, there's no.
You see a similar changing in the guard with like the bank CEOs, for instance?
Yes, exactly.
Like Jamie Dimon will retire.
Yeah.
Go down all the sort of legendary. That'll be a whole new vanguard of leadership in private, in the big companies and in the big governments.
I think you have to see it. I think you're going to see it all over. I think.
And do you think it happens in a year or 5 years?
Well, you have a new CEO in Amazon, and you're probably going to get a new CEO in Apple at some point very soon. And
you saw what just happened at Disney, which is not necessarily meaningful. I understand you can't.
And you throw in, a couple other. I mean, I don't think Zuckerberg is going to be around too much longer, and so I think you're going to see. I think you're going to see a changing of the guard all over the place, both in politics, CEOs, and I do think it's going to be very different 2-3 years from now.
And do you think it'll be for the good, other than the positive drift? Because I feel like it will be. I ask you because I actually feel very optimistic. I understand the decline in sort of the opportunity of an opportunist exploiting inefficiency, which is what you are at your best, and a teacher of that. But outside of that skill set, I still think that very productive, creative decisions. I think we're on the verge of a nice period of time, which may be a jinx of some sort, but it feels very real.
Yeah, I agree with you. I think this bodes well for people like you. Yeah.
Do you think it bodes poorly for others? If some particularly, so when you say people like me? Because
you're in that wheelhouse. Yeah. I think it's going to make things a little more difficult for really young. I think people are going to look for a little more. We go in trends, like the NFL, for example. They went through this period of time when every coach had to be 33 to 35. Then they go back to everybody's going to be 50.
Where you're just saying the basic sort of social archetyping of the custodians of. Who should be the custodians of decisions?
After 2008, we decided that every CEO needed to be, 24 years old, and after 2022, we just figured out that every CEO needs to be maybe in their 40s, 40 to 50, because you need a little more experience than nothing, and not too old,
and not so motivated by fraud.
Yeah, exactly.
I'll tell a story that I have a relative who was a student at the same institution that Sam went to, and I used to speak of him with pride. I was like, "Good job, you've been accepted to such a fine institution." And then he told me that in the dormitories, they spend a lot of their time talking about elaborate frauds. He's like, it doesn't surprise me that Sam came from our dormitories because we've spent a remarkable amount of time, half the time, talking about conceptual scams. Could you? Would you? Would this dog track? We'll do all this, all these little teenage, early 20 like schemes.
Yeah, I care not to. I don't buy that.
So you don't think that the appetite for scheming is more today than it was when you were a lad?
No.
I agree with that, actually.
Yeah, no, I don't think so. I think not with the degenerates that I hung around with when I was in. Now I didn't go to MIT, but but it was. Let's put it this way: it was a much lower level scam back when I was going to school in Albany, New York. I think it was more like, how do we get this Domino's pizza for free? Not how do we take down the how do we take down a cryptocurrency and half of digital assets?
Corner the unregulated global asset market in the Bahamas. And
yeah, it's more like, how do we get the next pinball game for free so we don't have to put a quarter in the machine? So yeah, it was a much lower level of fraud. Yeah.
And the other thing that I think is a consequence of all this is I believe Apple will be broken next year, by the way.
I do think Apple will be broken, but I've thought Apple will be broken for a long time. The problem is that Apple would have died on its own. And I promise not to bring up a certain person today.
We can't bring up any of that. I'm just saying.
I understand, but
reality check. Apple wasn't the shooter here.
Yeah, Apple. The one thing you don't want to do when you have a bully like Apple is you don't want to get them to circle the wagons and become stronger because they have a common villain. And so, because Apple's too big to have a villain, Apple is the villain. And if you let Apple off the hook, it's like when you have a team that's a dynasty, and yet you give that dynasty a reason to think they're an underdog. And so,
it's degrading for everybody.
That's right. And so the worst,
if you're not Apple.
Yes. So the worst thing that somebody else can do is to basically empower Apple into thinking that they're an underdog again. And I'd rather let them die on their own. I think they were.
It's like, because I feel like they're the most likely to be. I feel like they're the same way Microsoft was teed up in the late '90s with Bill Gates and before.
Sure. Yeah. Yeah.
I feel like Apple's teed up in that way going into 23. The Democrats held some ground. La la la.
Apple is the most vulnerable because Apple is, when you basically look at the world right here, and you see, and you think about, what has normalized in price and normalized in identity and everything else, and you start to recognize that Apple's the one firm that's pretty much escaped everything. They're the only ones. And it's you can see it in their market cap, you can see it everything else. The rest of the world has taken a hit. Apple has not. So yeah, Apple is the next to go, but you can't you can't give them bulletin board stuff.
But would you trade on it? In other words, because I've even entertained, it's an intermediate term, some kind of a directional, because my belief is pretty strong, I guess is my point, where I would trade it.
I think if you want to look at Apple as, as being an underperformer going into the future, I think it's a really good bet. But to bet against Apple, I don't like that bet as much as I like them underperforming. So I think Apple's going to be one of those stocks that is going to be a really good trading vehicle, and it's also going to be a healthy underperformer. But I don't think, I wouldn't bet against them.
Directionally short on under any circumstance.
Yeah, I'd rather bet for other things and just leave Apple out of the equation.
Right. Because of Apple's resilience is so profoundly powerful that even in the face of the biggest headwinds, they hold the line.
Yeah. Yeah. Mm-hmm. I mean, they have effectively, they are a monopoly and they have commoditized, annuitized their revenue stream. And that could easily break. But you haven't gotten paid for doing that, betting against them yet.
So when you say you like things that aren't Apple, like, for example. In other words, instead of trying to have an Apple opinion because it's too squirrely.
Yeah. Well, I mean, everything else. So, I happen to be long Amazon. I mean, of the big stocks, I happen to be long Amazon here. I happen to be long a few deltas in Google, like those kind of things.
All of it, anything but Apple, as a bit large cap tech.
Not anything, but of the other names, like I like Amazon here. We're not long Netflix now, but we have been for the last couple of months. That kind of thing.
And do you think these new CEOs coming in from these celebrity founder CEOs, like with the Bezos thing as an example, or Ballmer did theoretically a good job for Gates long ago, and now they've got yet another keeps going. In other words, you have one version where I would call CEO succession success, which we'll call Microsoft for sure, that Amazon, who knows, but good enough. And then Disney had to bring the old CEO back because they screwed the pooch. And so, do you have a point of view on why or how that happens, or who makes that happen, or
well, it's virtually impossible to replace this. I mean, the only Tim Cook, Steve Jobs died, so that was different. But when you think about the rest of the world, and you think about like replacing like a really good coach or manager in sports or a CEO in business, nobody wants to come in,
after the founder of Amazon.
Of course. How do you win? How do you come in after Bezos? I guarantee you can't remember who the coach of the Bulls was after Phil Jackson left after 6 championships. Okay, they brought in Tim Floyd, and I believe he had the worst record in the history. He's never coached again. I'm just saying this is the nature of any change. No,
I know, but it's interesting because even there, I bring it up because the Iger thing is unusual. It's very rare that the old CEO comes back in, even if the new CEO is a different company in a different world.
Look at the first time when the board got rid of Steve Jobs, and they basically fired him, and he's like, "Can they even fire me?" And they're like, "Yeah," and they fired him, and then they realized that they were dead without his vision, without his leadership.
You think that's Bob Iger at Disney?
I don't know anything about Bob Iger, but I guess investors think it is. The board thinks it is. It clearly wasn't the person they had running it, but Apple made the right move it's pretty hard to go back and admit you made a mistake.
A big pill.
You know how hard it must have been for Apple at the time to go back to Jobs.
That follow-up meeting.
It's freaking hard.
Go out and buy him a smoothie in Palo Alto, see if he wants to talk.
Yeah, he
might not want to talk.
That's next to impossible. That's that's impossible crap. Think about all the bands where over the years. We never used this analogy, but where like the lead singer, steps away.
So you bring him back, bring Sting back to the Police.
It's pretty damn rare, but
not going to happen.
Yeah,
even if they like each other, but still.
But yeah, egos and everything else. It's oof, but I don't know.
Well, I guess my point is that like the wheels of time are turned slowly but extremely fine. And I feel like a lot has been revealed in the last 3 years. And because of the generational issue, a lot more will be revealed. But I also wonder if my thesis is correct, and it's terrible for you, because there'll be much more information, less ambiguity, less fear, and overall lower volatility for potentially a couple of years.
Yeah, potentially, yeah, after what we saw this year. And we also saw kind of the underbelly of the world over the last couple of years. Between the pandemic and between a lot of the divisiveness here in the U.S. because of our politics, because of the craziness in Russia and Ukraine, I think we've seen a really ugly side to the world, and I
totally agree.
But that usually changes. That's usually
I
very
feel like
cyclical.
I agree.
Yeah.
But I
So
feel like it's a value, right? Like I feel like the suffering, it's like you plant the seeds and you eat the fruit on, you plant the seed on one day and you eat the fruit on another day.
yeah, yeah. And
And
that's why everything's going to change, because nobody wants to go back to that way. That's why you're going to see all new politicians. That's why and elected
totally.
officials. That's why you're going to see new people in power all over the world.
Could be thrilling. I mean, because you could have a generational power shift finally away from the baby boomers and really into you and I are capstones at the top and bottom of probably the same-ish generation.
Yeah.
With you being a very young version of a boomer and me being a sort of anyway, we're close enough. The boomers are done, baby. That I think we're declaring the boomers done at the end of this. Is it? They've had their go. Nancy Pelosi's done. She's not even a boomer.
Yeah.
She's
Yeah, I think that to a certain extent,
call it, send them all home. Call it.
you're just going to see the next round is going to be fascinating. The next boom is going to be really fascinating, and
new characters across the whole field.
yeah,
Banks, tech companies,
yeah,
governments.
yeah. And anybody that thought this is the end of decentralization, you're out to freaking lunch, because it's not.
The end of decentralization or the end of centralization?
The end of decentralization, like with the whole meltdown of of FTX and
we know, we all saw. You
right.
don't have to.
I don't. But what I'm saying is this is not the end. It's a call to action, and so you're going to see, I think, massive growth in DeFi, massive growth in Web3, massive growth in massive change to market structure.
Massive. I think it's going to be massive. I think it's just.
So do I.
I think it's going to be. I think that's again 23 through 27. It's going to be. I believe a blockbuster is heading our way, but I do believe it's a shift away from the opportunist counterpuncher, which you are a master. You're like, that's your like natural jujitsu.
Yeah.
And you're an instructor to others, right? But this is going to become more of an offensive. I think this is the next few years will more reward offense than defensive or countermeasures.
Yeah, I think so too. I think if you're not offensive, you will miss the move. And I think that we are going to be, it's going to be, after the last couple of years, it's going to be really challenging to be offensive. But I think you got to roll the dice. I think you got to be offensive.
Yeah, and I think we're going to see other companies that are successful do it. I think it'll be fun to explore the offensive strategies personally.
Yeah.
And I think it'll be fun to see other companies reveal some of their offensive thinking. Surely you and I are not the only ones feeling this.
Yeah, unapologetically, we have to move forward offensively. I think that is the best way to leave today's discussion, is that we have to be very unapologetic about being aggressively offensive going into 2023 and beyond, because I agree with you. I think that you are going to get absolutely destroyed for playing defense.
Destroyed.
Yep, I agree.
Get destroyed.
I agree.
But offense is fun, but it's a different muscle. Everybody's very, very easy to play defense because they've had 3 years of training.
Yep.
So it's a little time to stretch the offensive muscles.
Yep. It's time to start firing boards. It's time to start firing boards, bringing in new people, new attitudes, and playing and flipping the cards over to being offensive.
Totally.
I'm Tom Sosnoff. He's Dylan Radigan. This is Truth or Skepticism. Thanks for listening. Every Wednesday at 1 p.m. There'll be one Thursday coming up in December where we're going to move the show to, because I'm out of town. But other than that, Dylan, every Wednesday.
I mean, but I thought it was this Thursday. I only can see 1 week at a time in the future.
Anyway.
Everything else is I'm like a forest animal. Like I can't see. I don't have a sense of that far in the future.
We will talk to you soon. Thank you.
Bye. Bye. Have a great day. Bye.